from Blunt House Technical Analysis, and we are here for another edition of Chart the Markets with our good friends from FEG Token, smartdefi.com, and of course our exchange sponsor BYDFi. And if you head over to BYDFi.com or click the link that you'll see on our X or YouTube posting and enter the code capital K5 capital Z letter 4, or sorry, numeral 4, capital T, lowercase p. And it gets you eligible for our new user bonuses that we give away each and every stream. But now that we've got that out of the way, what we're looking at is the weekly chart of Bitcoin. And this stream, we kind of started off saying, you know, the beat goes on and charts don't lie. And that's really the charts don't lie part is the takeaway, right? The beat's going to continue, but the charts don't lie is really, really, really important. And when we look at our weekly Bitcoin chart, is this just not what we talk about all the time? Just a series of breakdowns. Break one level, find the next. Current price looks for past. It's not really that hard a concept. And we can overlay a few simple things to add to the increased probability of making a safe trade, getting on the right side of things. And part of that is just blocking out the market noise. And this is really important. For those of you that are passionate about trading and markets, like most of you are that would obviously come in here, one of the traps is getting caught in group speak or narrative. And that group speak and narrative is usually to the upside, and it's easy to get caught up into it or sucked into that tornado. It is the reason ultimately that I prefer charts, because everything I need to know is on the chart. We have a handful of rules that we use: break one level, find the next, support and resistance levels that we can identify, and these help us create targets, right? So here's your daily Bitcoin chart. Now, we've gone in here, we've got a chart with even more levels that we used before, but let's stick to the one that's a little cleaner. When you're trading above the 20, the 50, and the 200-day moving average, you have to appreciate that at some point in time, you're going to come back and start to at least test these levels, right? We talk about this quite frequently. When you're trading above those levels, you're obviously very bullish, and at some point in time, price will need to exhale, and it will come back and start to visit those levels. And that doesn't necessarily mean that you have the mother of all breakdowns or anything like that. It's just what price does. You know, as you can see on this, even on this chart, look at this big move to the upside. Were you trading kind of well north of the 20, the 50, and the 200? Sure you were. And that's okay, right? You just have to appreciate that at some point in time, you're going to come back and test these levels. There's the 20. You broke the 20. And when you break one level, you typically find the next, which you did, which was the 50. None of this is catastrophic. It's just the ebb and flow of price. What happens when you bounce off the 50? You get a real nice pop. Why was the bounce more likely than not? Because it was the first touch of the 50 since it broke it here. Typically those hold, or have a higher probability of holding. But when price fails a level, and this up here, we know what this is. This thin red line is the point of control on the volume profile. This thin red line, or thin blue line, is the lower value range. Price didn't want to trade above the point of control. That's the average of all this kind of past volume. Fails to break out a second time, comes back to the 50, and then this time it doesn't hold. Break one level, find the next. Second attempt has a higher probability of failure. And you can see it played around here for a few days before it figured out what it wanted to do. Price rolls over, looks for the next level down. And eventually, that's what it will find. So when you're trading above these levels, know that you're going to come back and start to check them. They're not catastrophic. It's just normal ebb and flow of price. And price is likely to hold, like we had a level here at 100,946 for a reason. Because price has been here before. And it spent 1, 2, 3, 4, 5, 6 days in and around that level. It even tried to break out, but nope. Our measure for trend said the trend was still down. So we're breaking, you bounce, sure, that's great. Price starts moving higher again, and then when you're trading above all those levels, when you're trading above all your support, just be aware that you're going to come back and check them. It doesn't matter. It doesn't necessarily mean it's catastrophic, and that you're going to come back and check them all at once, but it's more than possible. It's just how price will go level by level by level. And I tweeted the other day, this is a trade of levels, right? Is this not a trade of levels? It's almost like a staircase. But way up top here, you broke the 20, you found the 50. This is your weekly. You broke the 50, you found the 100. Now, here's the fun part. Everybody wants to say the bottom is in all the time. But what do we know about the trend that we see on this chart? This is a weekly chart. This divergence between our T-line and 5 EMA, which we're using as a guide for trend, is telling us this trend is still down. And this little candle, this little doji candle here on the weekly, albeit green, is not a bullish candle, at least to me. Why is that? Because what you expect when you have an impulse down, and this is any time frame, this would apply, you have this impulse down and you catch some support, you would hope that you would at least try to bounce and at least test these areas. I'm not saying you're going to break them, but at least test them to try and trigger that change in trend. This little thing sitting down here is just waiting for time to catch up. So you're going to have this impulse down, and then we kind of go sideways or nowhere until time comes and meets. And that's when we kind of have that next move. I do not like how this wick broke that level. And when we go to the weekly chart for Bitcoin, and again, you can kind of appreciate it's still a relatively new asset, right? But here on the monthly chart is all that's showing, because time only allows for so much of the average, so many of the averages to appear. You have the 20 monthly and the 50 monthly. This is the first time, since April of 23 that you've really had any sort of serious retracement. You can see here for the better part of, a couple years almost, price went nowhere but up, and the trend on the monthly stayed completely intact. And this is the first time it's looking a little bit ugly, where you actually come right back to the 20. We show this on an hourly chart, a daily chart, a weekly chart. Well, here it is happening on the monthly chart. You really hope that this first touch of the 20 provides you with the support, if you're long, that you're hoping for. Because we know that if we fail this level, we are going to look for the next level. And that next level can be found in a couple different ways. One of them is major moving averages. It doesn't matter if you're using EMAs or SMAs, those are kind of the targets that I would use. So we have your major moving averages. We also have where price has been before, these benches of past price. And we talk about this in every stream. And as all I'm doing is I'm taking what appears to be a resistance level and then connecting this wick down here, just trying to create some sort of a bench or a target where price may be attracted to. Again, in here you've seen it. Could it be a little bit lower? Sure. But again, we're just trying to give ourselves a range. We could do this, right? But I don't want to navel gaze. I want to focus on that wick. And that's 74,000. But if that didn't hold, which, to be perfectly honest, that's not a ton of price support in there at all, and puts this 50 in play, does this look unreasonable as far as finding levels? Somewhere in there, right? Tops of these candles, pick up this wick, pick up all these wicks in the base of these candles. Could this be the area where time and price come together and find the 50? It's possible. I'm not saying it's going to stay there, but I'm just saying that, hey, that's a legitimate target. We do this twice a week so that you can go back and check to see how accurate we are. And I think you'll find most times we're pretty accurate. Because all that's happening is current price is looking for past price. Break one level, find the next. That's all we're doing. But doing this and understanding how price moves will allow you not to have an anxiety attack every day when you wake up and turn your machine on and you start looking at your screens. Right? Nothing goes straight up, nothing goes straight down. Right? It's the ebb and flow of price that creates the opportunity for us to monetize the chart. And just to kind of simplify this chart a little bit, if at all we do is the what we're told part, let's just do what the chart tells us and that kind of stuff. This is really not that difficult to track, is it? There's your top, there's your confirmation. Your big boys and girls, you can decide whether you take the trade early or not. You can see that your 5 EMAs turned red, so you know that there's some selling there. But, there's your first wave down. This up here is the insurance that you pay at the top to make sure that you're on the right side of the trade. This down here is kind of the insurance that you pay before it breaks out the other way. And everything in between is yours. And then what do? Well, then you rinse and repeat it. They don't all turn into runners. So why is that a short, when I say short trade, I mean by duration. Why are you in that trade for only a handful of candles? Probably because you're in an overall downtrend. Is this trend look down to you? Yeah. So what are you looking for this to actually be? So there's your first move down, a retracement perhaps? Yep. First move down, retracement. Here's your next wave down. Failed breakout does what? Comes back, takes out the previous wave's low. When this broke out, it took out this level here and then faded right away. And throughout all of this, even through these 5, 6, 7 candles in here that made everybody think that, oh, here we go, next, we're done now. We knew that we weren't, because the chart was telling us that you were still in a downtrend because this was all diverged and separated still. Right? Those are your technicals' way of telling you that the momentum down is there and the trend intact down is still there. And here we are today. So what could be happening? What does this look like? Perhaps like, I don't know, maybe we've seen it a few times before. This looks like a test of the T-line. And if it ultimately ends up being a failed breakout and this dies and you roll over, you're going to come back and take out these previous waves low or more. The chart doesn't lie. Oh, here's 4 or 5 green candles. Everyone gets excited and they want to have a parade. And if you're listening to the band that's coming down the street during parade hour and not watching your chart, you're looking at the wrong things. The chart has all the answers. All the answers are on your chart. Remember something. Well, let's actually go back. Let's go back to the big sell-off that happened in October. Because all we've had is just one significant down move since then. Just go to the weekly. There's the weekly from October. Does this look a lot cleaner to you now? Can you really see what's going on here? That's a top. M's and W's. What do M's mean? M's are murder. Right? That's what's going on here. Murder. That's what it feels like to all of these people. Is murder. All of this here, like, I'm sorry. I get sick and tired of listening to people that I don't see it happening. This is bullshit. This is nothing. There's no money here. There's no volume here. There's nothing here to hold you up when you fall down. It's as simple or as complicated as that. You can have your tires pumped all day long if you want, and you can hit the buy button all day long if you want, but when you're on the wrong side of this thing, you're done. You're done. And if you're making decisions that are based on ego or the fact that you think you're right and not listening to the chart, you're also done. This is how people lose all their money. By not taking the time to analyze the chart on all time frames and be honest with themselves about what they really see, to be objective. You can learn so much about where price can go just by using a simple volume profile. Dead ass simple. Where has the money been? Where has it not been? And everything in between is opportunity. When you see this gray, it's just an indication of light trading. This is the dense trading. Down here, here's your volume profile on the weekly Bitcoin chart at 20,800. Upper value range is in here at 47 and 48 rather. I'm sorry, 47.5. And I don't care how bullish you are. Price when in these areas is susceptible to massive price movements down when the trend is down. If the trend was up, we'd be having the opposite conversation, but it's not. The trend is down, and you have to start looking for levels to the downside. It's as simple or as complicated as that. So what do you think's happening right here? You don't think that maybe we're going to come back and take out these lows? There's a reasonable chance of that happening. Doesn't necessarily mean it's going to be this week. This is like a big move down. You might find that you have, a couple weeks of green candles on your weekly chart, but fail to break trend, maybe test these levels, wick these levels, and then what do you end up with? There's the failed breakout that comes back and does all the damage. But this is simply a trade of levels. It's probably going to be our next level that we come back and say hello to. And of course we know that our 50 MA is somewhere in here. So if you're going to technicals, use technicals both when the market's bullish and when it's bearish. Because the charts, was this bullish? Yes. Super bullish. Nowhere in here did you get any sort of indication that you should exit the trade. Right? Look at all that divergence was telling you that your trend was good. This is just a nice big move up, price going sideways, but not breaking down is a really good sign when you're trading on the north side of these levels, because that's a bullish indication, and then bam, price went higher. When you see this type of move, be equally as honest with yourself about what you see. Because if you're not, you're going to find that you're going to be trying to long within these red candles. And that is not the recipe for success. So being able to read the chart is one thing, but being honest and objective with yourself as you're reading it is another. Because you have to find another, you have to be able to maintain the bias at the door, right? You don't want it to sneak into the room. There's going to be times when, deep in your heart of hearts, you want something to be, for price to be rising, but you look at the chart and you're like, well, it's just not happening right now. And then conduct yourself accordingly. But don't pretend that you don't see what you see, especially in times like this. All it takes is just a little bit of context to see where we've been and to see where we can go. All right. This is kind of, I know it's unnerving, but the reality is this is still a bear trend. It just is. These are just green candles in a downtrend. And being honest with yourself is half the battle. If we look at B&B on the daily chart, if you don't believe that, there's a methodology to help you understand and determine and monetize where price may go, then look at this chart. Does this look murder? Do we have to do that again? No, you don't have to do that ever again. You'll see it each and every time. Do we want B&B to continue to move higher? Yeah, sure we do. Of course we do. Everyone's got a lot riding on it, all that stuff. But the reality is, when you see this, you're like, yeah, I don't think that's very nice. And look what happens. You break one level, you find the next. Charts don't lie. People do. The chart doesn't. The chart is reading everything that's going on, money in, money out in the market. Well, there was no warning. B&B just rolled over. Really? No warning? Of course there was warning. This two equal tops, right? Nice big bull run up, and then you get these wicks that don't want to break anything, and these two equal tops on a red and green candle trigger the red daggers to the downside. So just like on the Bitcoin chart we looked at, here's B&B on the weekly with a similar doji just hanging above a level of support, waiting, right? This is not bullish when it's just hanging out here waiting to be told what to do. If it had its own mind, it would be challenging those levels to the upside, and it's not. I own a little bit of that stuff too. Do I want it to go up? Sure. Right? But I can't ignore what you see on the chart. And it doesn't matter what the asset is. It just doesn't matter. Oil, right? Because that's the epitome of what we see on the chart and what price actually did compared to what other people wanted it to do. we've gone through this before, but on this chart is this. This is just a level by level by level by level thing. And we've gone through this a million times, right? We looked at this. This is the monthly, but if we go back to the weekly, this candle here, that's not a bullish candle at the top of a bull run, right? That's a bearish candle, that doji. Which is why when someone says, hey, we're going to $100 next week, well, I get why you would say that. You topped out at 95 that week and closed at 90. I can get why you would say that, but when you look at the chart, are we trading above on a long time frame, above the 20, the 50, the 100, and everything that we use as a measure of support and resistance? Yes. So automatically you're going, okay, if we do start to break down and we start to challenge these levels, what could this look like if it was to completely unwind? Right? We don't just do analogy or, analyze 5 or 6 potential weekly candles. We're like, okay, here's 2 serious levels of support, the 20 and the 50 on the weekly, with the 200 sitting well below 70. So even if you came back and checked those levels and failed, like, why is it so unrealistic to think that price is going to come back to the 200 MA on a weekly chart? And for those of you trading stocks, pay attention to the weekly charts and the 200 MA, because on a lot of these stocks now, you're trading well above, like well over bought levels, and you're starting to come back and break the 20 and check the 50 in some cases and breaking down, and people are like, oh, I'm just going to take the 200 MA off my chart because I don't want to know it's there right now because it's going to make me feel bad. Like, what are you doing? Of course price is going to come back to the 200 weekly. It's not rocket ship 7 in here. This is how price moves, right? Up, down, sideways. And this is just an example of failing one level and finding the next. And if this thing was to completely capitulate, as we're unfolding our analysis, what was the potential level to the downside? Way back here, 61.66. Now, are you going to be a walking living moron if you say out loud in a space on Twitter that when oil closed at $90 and traded as high as 95 that it's going to be 70 before it's 100? Absolutely. But this isn't about opinion. This is about what the chart says and how price moves. And we've done this long enough that we know, okay, boom, break all these levels. Come back to the 200. This is your basic bull bear indicator. You get a get out of jail free card. Price bounces. Fades. Boom. We instantly connect a trend line there, just for another point of measure. And what happens? Rinse, repeat, right? Break these levels, find the next. Was the trend still down on this weekly? Yeah. And what did you find yet again? The 200. And you get a get out of jail free card. You bounce. Notice how prices, lower highs, right? On the weekly chart, you wick that trend line. We don't live and die by trend lines, but when you wick it like that, roll over. Oh, and what happened? Failed breakout does what? Comes back, takes out previous waves low, trend down continues. Right? We know how this works. So no, it might look crazy to some people who are not looking at price on a chart. Maybe they don't know how to read it, or maybe they're just not interested. But those are the people that have all kinds of great advice on why you should buy oil all the way down here. All the way down, you're being told that, the demand is there and supply is this and storage that. You know what? Just shut up. No one gives a shit. At the end of the day, price is going to tell you where it's going to go. And it's going to go where it's been before. Like here, like here, like here. You don't think this is possible? Give your head a shake, because it is. just like all of these other levels were on the way down. There's 61.66. That was the ultimate target. And I'm a raging lunatic. No. I don't care about all that other stuff. I just care about what price does. And having an understanding of how it behaves helps us get to these levels accurately and safely. And you didn't have to spend 5 years at Harvard or MIT or Princeton to figure out how to do this. There might be people that want you to think that, but that's not what's required. If you can do what you're told just by looking at the chart, you got a real good chance of being successful. But be honest with yourself when you're looking at your charts. This is XRP. I got hate mail when I drew that line at 215. And I got more hate mail and I drew these two lines. And I'm not doing it to piss you off. I'm trying to help you. We're trying to show you where price is going. So enough with the hate mail. I don't care about what you own and what you don't own. It's not my business. What we are trying to do is help you understand what's going on the chart so that you don't feel like you're losing your mind each and every day. Like as soon as you go long, price reverses. As soon as you go short, price goes up. Like, that's what's happening to a lot of people. Because you got to be honest of what you're looking at. And if you're not looking at multiple time frames, it's going to be more difficult for you. Because you have to understand where the money has been and not been on all these different time frames. You need to know what the trend is on the longer time frames. Right now, I'm sorry, this week here, everybody thought that this giant wick and this move up was, and you'll see this on a lot of these crypto charts, that was the sign that this was just a flash crash, impulse down, moving back up again. But when you're honest with people, and that means you have to be honest with yourself, is that what you see on that chart, on this weekly chart? That's not what I see. I see this massive candle that produced this sell signal, and that's hard to do, right? Like, you have to have a lot of momentum to pull those things down like that, those short-term averages down. That's a lot of momentum to do that. Yes, you went down to $1.11 or $1.16, and you snap back on the weekly. But what does the trend tell us? So here's another. So how I look at that candle and I go, all right, I hate these wicks because, and this is an extreme one, but quite often these wicks get revisited. So I don't like that. And I don't like the fact that you closed below the 20. Right now, did we break the 20? Yes, but did we hit the 50 on that? On this candle, we just struck it with the wick. We didn't spend any time there at all. And you can see all this divergence is to the downside. There's your next candle. That one does close below the 50. Is this divergence down still intact? Yeah. Our indicator's even showing us that there's the 5 EMA is still red, showing us that there's lots of selling going on. There's next week's candle. Closes right at the 5 EMA, but unable to break trend. This divergence is telling you that the trend down was still intact. Following week's candle. So you're getting a little love at the 50 here, right? But the trend is still down. So here's your impulse down, and this is the sideways move, right? And then bang. That's when you struck your 215 level. Why was that level there? Because it was just, that's all I did was average this past price, the tops and bottoms of as many candles as I can, just to create a guide for myself of where price might go, so that I can have targets at these levels. These just happen to be targets to the downside, but we could invert this chart and they'd be targets to the upside. Doesn't matter. But it's just simply one candle at a time. So this big dagger down and this recovery, that wasn't bullish. Still bearish to me. And this is where the trend is so important. And look what happens. Here we are. Why did we draw a level at 190? Simply because once we took that out, we're looking for a next level down as a target. Just trying to find, here we find a bunch of the wicks that we can line up and the base of a few candles, and we're like, okay, that'll work for me. Boom, drop a level in. Why are you doing this? So that you have targets to take profit at, and you have opportunities on the chart to actually look and see, yeah, that's going to be a draw for price. All of this price back here, all of this basing, as this rolled over, you just had to know that this level was going to be a draw. Like, I don't understand what people don't get. And, you know, we're still trading below the T-line and the 5 EMA. You can't will price up, right? We can try, but it doesn't necessarily go our way all the time, does it? Here's the Aster chart. And if you take away anything from this chart, and I'm not saying, you know, you give up on it or anything like that, but I think most people in here are saying or feeling that this chart will eventually break out, and, you know, then you'll be kind of off to the races. What you can appreciate from this daily chart is, as you're thinking that, and it's going sideways and maybe teasing you a little bit in here, it takes a long time, sometimes a lot longer than you're prepared to wait for something to break out. And, you know, one of the things that's required in doing this is patience. You know, waiting for that right opportunity to catch a breakout. I would say keep an eye on the 4-hour chart. You can start to see now that, you know, to the upside, if you're looking for targets, you can look at the 50 and you've got areas of past price that also kind of line up into that neck of the woods. So you start to got areas where you can look now, if it does break out, that it could take off. But here's your buy signal, right? On your 4-hour, there's some support from the 200. Right, you've been in here enough times to know that when you see support at the 200, regardless of the time frame, it's typically a good thing. So you had this big move down, you finally got some support, printed your buy signal, and hopefully this is a situation where you get to put your feet on the desk, right, where you're in on the 4-hour like at an early level, because ultimately what you want to be able to do is say, I got a great entry on the daily. Like, I mean, you know, that would put you in here on the daily. And it might be 1, 2, 3 days before you even print a buy signal if you were to get one on this daily chart. But yet, because you entered off of the 4-hour, you would have been in the trade early. It doesn't feel like it, right, when you're in here, but in retrospect, you're in quite early. And you don't have much to worry about as price starts to break out. And then, all of a sudden, you're not stressed anymore. Is all you did was take a 4-hour signal to the upside. And in this case, it would have been the first one you've seen in a while, so you'd be excited to take it. Is it the one that's going to run and, you know, take out this high? We don't know, do we? We just don't know what comes after the current candle that you're working on, but you can determine that you're on the right side of the trade because the trend is in play. The trend is intact to the upside. And that's what we want to be able to do. We want to be able to get you in a trade at a safe time so that it becomes that safe, profitable entry. And if you guys have any questions in the FEG chat, just, jump right in at any time.
Hey,
Oh, there's Rico. How you doing, Rico?
doing good, man. Just been amazing, kind of listening to what you're saying on here, and if everybody else who's listening, if this makes sense to you or doesn't make sense to you guys, if you guys can repost this, I'm going to do this part for month because it's super important. It's super important for us to share these channels and these streams because this is how you get a lot of that. I don't know, man. Sometimes even it's like sometimes the overall sentiment when I just see everybody panicking and we know what's going on, it gets a little bit annoying. And I'm glad you brought up ETH because this is one that when I was bringing up and I was telling people about it, this is the one that I actually wanted you to bring up was we told everybody I was saying $2,500 ETH, and literally my chat during my live stream was saying no way, like no, don't tell me that. I'm like, look, I'm not here to flood people's bag, but even if you didn't want to accept the sell signal that was like well in the 4,000s, I'm not on it right now, but once it broke the 200 moving average, you would have had to just been a big boy or a big girl and say, are we going to trade into some of these gaps? And these gaps lead us right to where that $2,500 mark is at. And, that whole setup and this strategy is why, we didn't just pick a price out of thin air out of nowhere and say, oh, what price do you think ETH is going to? 2,500. It's like, no, we looked backwards and, you found that right there where it's honestly, it didn't go too far off from that 2,500.
Yeah, and you know what, Rico? I don't think we're done. Like if we look at this weekly chart, this is just another example where we've got this candles really just waiting for everything else. You've broken the 50, you've broken the 100, you're trading below the 5 EMA, you have the point of control and the 200 sitting at around $2,500. That 2,500 level is consistent on both the daily point of control and the weekly. So that tells me or gives me the reason to believe, here it is here, right? There's that, probably what it's picking up. That gives me reason to believe that it's probably going to find it. Now, what we could see on the daily is, you've got your move down and a little bit of these retracements. This could be one of those retracements that, again, that fails, rolls over, takes out the previous wave's low, but is going to be drawn to that point of control. It's going to be drawn to all of this past price, right? Another great example of that is MicroStrategies. We did this in the chat one time where we circled all of this to the left because as price was falling, it was going to look for high concentrations of price from the past as it broke these levels. And then we also put, so this was the 1,000-day moving average. And then I just kind of remember I just drew this line because I believe that's kind of what we're doing here. And then on the week,
you look, honestly, even on that chart right there that you were just looking at, it's like that sell signal is way up there.
Mm-hmm.
And yeah.
So this is the weekly of MSTR. Whether you're trading above the 20, the 50, the 200, you're trading above everything. It's not unreasonable to come back and check the 20. Right? Now, if you're looking at this chart on the weekly, of course, you see all this past price. This what we identified in here. This is the first touch, so you'd be hoping that it would get some support, right? Like it did for a week, and then it was it. Comes right back to the 50, but yet this is not the first touch of the 50 in here. We've been here before. It broke, found the 100, broke that, and it's looking for this. The 200 on the weekly, which is the 1,000 on the daily. Right? And what prevents this phenomenon from happening? A whole bunch of money that reverses the trend. That's what it takes. And is this a sign that there's a whole bunch of money coming in to reverse the trend? No.
No.
Right? Like it's as simpler as complicated as that. Look at this weekly bearish engulfing candle that hit resistance at the 20, and then on the rejection split the 50, the T line, and the 5 EMA. If you weren't short already, right? If you didn't do what you were told up here, like this would have scared the crap out of me.
Yeah, once it broke the 50, you could have waited. Let's say you didn't want to, you got a sell signal above the 50, but you're not still too, maybe you don't want to take the first signal you see. But once it broke the 50 with that momentum, it's like, yeah, the party's on.
Oh, yeah. Yep. And, if you're, let's say you're trading options and you're looking at long dated options for something like this, trying to get an understanding of actually how these levels could break down, like I find it really useful, especially on something like this, where like this is just completely textbook in a sense.
Yeah, it bounced off the 50 all those times. It's like, that's the thing, is like what sucks. And it's like, man, we all been there, right? It's like you're looking at that chart right there. It's the weekly, right? It's a beautiful chart. You see this bounce on the 50, bounce on the 50, bounce on the 50. This one didn't bounce and it broke through, but yet people are still saying maybe it's like, no, look, it just changed this whole character. All the stuff that it was just making us feel excited about every time it bounced, it's no longer being that no more. So we have to change the way that we look at it, because it's no longer the same. Just because the ticker is still MSTR, it doesn't mean that we keep the same outlook of the current price and where it's going right now. It's like, yeah,
that's right.
I know the feeling, fam.
Yeah. We talk about using, and I know that I'm not a lot of people use some of the longer term averages. I get that, right? To each his own, and what works for somebody and they're comfortable with that's awesome, right? Like, I'm not trying to tell people to do things differently. The reason that I use them is because it helps me kind of frame in ranges. And, if we use the 5-minute SPY chart, yesterday, here's yesterday, kind of leading up into that kind of crazy day where we got into this 1,000-day MA range, and you can see all of this resistance, right? So all I'm saying is that take the low end of a range that you would know exists. This is the 5-minute SPY. Could be 15-minute, could be an hourly, doesn't matter. This lower value range for me, and the upper value range, and in this case, because the 1,000 MA roll up in here too, that's a range, right? So if you're trading, you kind of break down and you start to break through that lower value range, and you're looking to the upside now. Did the trend hold till it got to the 200, and then it failed, right? Gassed up, the whole flowers and chocolate thing. Flowers and chocolate, ring the bell, try again. There's an ebb and flow to how price moves, right? Nothing goes straight up, nothing goes straight down. But by allowing yourself to use these levels as a trading range and for targets, helps put structure behind what you're doing. I should probably shorten this time frame up to make it a little easier to look at, but here's your 15-minute. This is why we use fractals, right? So what we saw on that 5-minute chart where we were seeing the resistance at the 1,000 MA, here's the 15-minute. That's the 500 showing us that kind of resistance. But this helps frame in ranges and gives you opportunities to create targets. Well, when do I take profit? Well, take profit maybe at these targets. Take some here, and then the next level, take some there, and then the next level, maybe take it all off, whatever. But just use them as ranges. So I always have 1,000, and I always have the 500 9 times out of 10 on my chart, because they help frame in ranges, help frame targets, so that I'm just not staring at the chart going, shit, now what do I do? Right? I'm in a runner, now where do I cut it? Where would I might find some resistance? Where should I take profit? Well, now I know. And then, of course, we're watching, our T line, 5 EMA for signals. And if, again, you want to smooth that chart out, there's your hourly of the same thing. Lower value range, upper value range. There's the 200. So the 200 and the upper value range are there as resistance right now. Look how you went through the volume. Look, see this gap? This is what happens to price when you work through the gap to the upside. Why was that gap created? Because of this. These parabolic candles, up or down, create volume gaps. And then when price revisits those areas, in this case to the upside, boom, 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 get out of my way. The divergence between the T line and the 5 EMA just opens up and shoots higher. That's momentum. Getting resistance at this level should be completely anticipated. If it blows through, if it starts to push higher, breaking through that upper value range, well, now you're into that lighter trading, so you're aware of that. And then you see this gap here also to the upside. So the light trading and the gap combined would create an opportunity for price to move with velocity up into those areas. And where would you find resistance? Either where you see a shelf, a volume shelf, and essentially that's what this is here as well. But these shelves are areas where you would see some of that. And then, of course, they represent the past price that you need to break through. And that's where, because current price is looking for past price. The fact that these gaps are there just helps it get there quicker. And if you can do that, you're probably going to be okay. And using constant fractal analysis. So I was chatting with someone who I've been working with a little bit, and he was having a harder time with the understanding of fractals. And we talk about it in here about, let's go to Bitcoin chart, how we will look at a monthly chart, right? And we'll see this big monthly candle, understanding that there are 4 weekly candles inside of here. Right? 1, 2, 3. These 4 candles are making up the current monthly candle, and so on and so on. And he's a super smart guy, but he was having real trouble with the whole concept of looking inside these candles. And I said to him, have you ever heard of the butterfly effect? And he's like, yeah, there's from that movie, like the Mothman Prophecy, something about this butterfly. And I was exactly what it is. Right? Think of fractals in the concept of the butterfly effect, where what can happen on a smaller scale can have larger effects. So when you get a buy signal on a 15-minute chart, the butterfly effect would mean getting that type of confluence then on that 30-minute chart, right? So the butterfly flapped its wings on the 15-minute, and now I'm starting to see the effect on the 30-minute. And you just kind of continue with these time frames, right? There's, the effect on a longer time frame. What happens in a smaller scale can affect the greater scale over time. And from that point, he was like, okay, I get it now. So I was like, all right, thank you, butterfly effect. But that's essentially what it is. And this actually is a real thing that, appears in nature. It's kind of like Fibonacci's and things like that. Appears in nature and also appears in finance. But that's kind of what the butterfly is, the butterfly effect. So what you see on those smaller time frames can then start to manifest themselves on the larger ones. And that works both for what you see to the upside and, of course, to the downside. Something happened up here. It could have been minuscule, but it had an effect on everything else. And when you drop your time frames down, that's when you'll see those minuscule things. So if we're looking for, like, this SPY chart is an interesting chart right now. Here, your 1 hour chart, and you're seeing the resistance at the upper value range in the 200. Trying to ask yourself, hey, is this a short setup, or is this thing going to bounce and move higher? What do? We drop our time frames down. You know, the early time frame, the 5 minute, started to show us that, hey, maybe there's a little bit of a fade here. We could simply come back to the 20, bounce, and then we're talking about what looks like a double top, right? 2 equal points in price. But what you're going to see what you need to see will start on those shorter time frames, which is why I'm always looking on the 4 hour chart for what may turn out into a good entry on the daily chart. There we go, Zcash. So there's the daily for Zcash. Parabolic price movement, right? What happens? It fans out all your levels. I'm not showing you something that I haven't showed you before. Broke one level. There's the 20. Price came back to the 20. Broke it. You can even see on this candle here, it really made, these two candles really, it did make an effort to try and break higher, but failed. Can't break the T-line. Can't break the 20. This is resistance, right? What happens? Well, we had a clue because this divergence was already in place, telling us that we were in the midst of a downtrend on this time frame. Came back to the point of control. Why? Because it's a draw for price, right? It's the most concentrated place where price has been before, where buyers and sellers have shaken hands. So it came back there. It's not holding it. So if we're breaking one level, maybe we're looking for the next. Probably. And the only thing that will change that will be a massive influx of money to reverse all of this and turn it into an uptrend like you see here. But you can't get in the way of momentum. Like, you don't want to short this wave. Like, that's suicide, right? You don't want to long in here. Also suicide. And if you find yourself in this type of market in a position where, geez, you know what? It seems like we're in a bear market, but I'm not comfortable trading short. Everybody has been there at some point in time in their journey. And I know a lot of people, like even in my Telegram group, that at one point, you know, they wouldn't make a short trade to save their lives. Now it's one of the most fun things they do, right? And they're able to kind of monetize the chart both up and down, because that's the job. We only have one job, and that's to monetize the chart. But if you're in a bear market and you're only a long trader and you have no comfort trading short, you're going to have a problem, because you're going to be the guy trying to long all these red candles. That's not a recipe for success, right? Doing what you're told would be going short here. That's how you would monetize the chart. And it might feel intimidating at first, but you know what? Once you find a little bit of a rhythm, it's just it's like left foot, right foot. So if you're looking at Zcash, did you see up here at the upper value range that, you know, you can wick it once, you can wick it twice, you wick it a third time if you get that chance, probably going to fade you. Like, the market's telling you that, yeah, I'm not really too interested in taking it above that level. I'm not saying that this is an irrelevant move, it's not, but I'm just saying the market was like, nah, that's where you're stuck. Right? You would just, again, be breaking level to level. Look for the 50. You don't hold the 50. Look to the 100, and down here is the lower value range, which tells us that time and price would come a little, move a little bit. Maybe your 100 is actually in and around that level when it's tagged, but this big gap to the downside would be telling you everything you need to know. Does the chart not look different with the volume profile on it than without? Yeah. Like, to me it does anyways. I find it very helpful to see where this volume profile shows me the gaps and the upper and lower value ranges, and of course the POC. That's very valuable. And it's within, the volume profile comes within our own indicator as well, as part of the suite. So, as well as all these averages that you would see. And does this not frame in a range? Yeah, it does. Right? It does. And by the way, does this look any different than, for example, what we just looked at here? No. I'm not suggesting that, Zcash is going to do that. All I'm showing you is how it happens and why it happens. Everything's technical at the end of the day. It's a representation of what money's doing in real time. Right? It's about what money's doing, not what people are saying. And that's all that really matters, what the money does. Another privacy coin. It seems like, every month there's another sector that seems to suck all the air out of the room. Lately, it's been privacy coins. Flat trading, this is just the accumulation phase. This is acceleration. This is exhaustion. Now that we know that, is it helpful to know where price might go? So when you're trading this chart and you're all excited, when you see that candle there, please tell me you know what to do. Like, stare at it for a few minutes, but if you ever see one of those with these giant ass wicks and these short little bodies at the top of a bull run, pay attention to them. The chart's not going to lie to you. I guarantee you that somewhere in the world someone was saying, you're not going to see prices this low again, man. You better buy today. And someone does, right? Maybe they bought all day long up to 580. And then they're going, but you said price wasn't going to go that low again. Just follow the chart and you won't have to worry about those things, right? And you don't have to look for other people to give you something to trade, because you're going to be able to either scan for charts or identify a chart at a glance and go, yeah, I want to trade that. I see that big volume gap here. Look, price peaked out. Where does it crash to? Literally right back to the 50 on the daily chart. Bounces, but yet hasn't changed trend. See, look at these two big candles, right? Did the trend change? Did you get a buy signal here? No. Instead, you got a red candle. While you're literally sitting in the midst of this big volume gap. It's like being in purgatory. Let's see what our monthly shows us. Well, we're a long way from the 20, and we haven't even tagged the T line. This is still a bullish monthly chart, right? This big red candle, all it did is come back and closed right at the 5 EMA. So technically on that time frame, it's still a bullish chart. It's the volatility that makes it a nightmare. But then again, that's where your opportunity is. That's where your opportunity is. Let's look at gold. Because 2 weeks ago, everybody said gold was dead. Sell all your gold. Not going to need it anyways. Blah, blah, blah. Nice talk. I don't know who you're talking to. And I really don't know what you're trying to tell them and why you're trying to tell them. But at the end of the day, the chart was saying, shut up, Charlie. Sit back and let the chart tell you what to do. Is that still a bullish chart? Do you see a red sell signal on that chart anywhere? From late 2024?
Yeah, from late 2024.
Nothing.
That thing's intact.
Yeah. So what's more important? Some guy that you follow on Twitter, or X rather, who, has thousands of followers and tweets 20 times a day about stuff that you can't help but tell your friends about. But at the end of the day, is all you had to do was this. And no, you didn't get any smarter in there, by the way. It's all that happened is you just got a little more confused, a little more polluted, giving yourself another unnecessary input that's irrelevant anyways. And the reason I'm talking about this is because these are the times that if you pay attention to business news, all of a sudden they want to bring out the technicians. Well, to get an understanding of what's going on in these volatile times, let's bring in Fred. A couple times a year you want to bring in Fred to explain to you what's going on? This shit's really easy, right? All this stuff about who sits in what chair and gets to make what rules and what interest rates are doing and what unemployment. You know what? All of that shit is right on your charts. You don't need that nonsense. Did I need to listen to somebody tell me where they thought oil was going to go? No, I didn't need them. They're just noise. Until they learn how to read price on a chart, which is the language of the market, just stay home. Sit down with a box of Twinkies, watch Oprah, whatever the hell you want to do. Just shut up. Learn how to read price on a chart, and then you won't find yourself looking for other people for answers. And yeah, you're going to feel like an outlier, trying to express what you see. Like on oil, like on Bitcoin several times. Charts don't lie. There are two types of people in this world, I had a boss tell me. Lion tamers and lion bastards. And how many lion tamers have you met lately? That's this world. That's this market. And if you're vulnerable to listening to the lion tamers, you got a problem. And I don't care where they worked, or where they went to school, or how many years they've been doing it. If you don't know how to read price on a chart, a lot of trees had to die for you to suck up air. Because it's all nonsense. At the end of the day, it's what money does, not what people say. And for all of the naysayers that, oh shit, you had 2 red weeks of gold, and you want to just jump off a building? Are you kidding me? When you look at a chart and you're like, oh shit, it just came back to the POC and yeah, it was really overbought there. You can see that right here. But as all price did was come back to the T-line and party on. That's it. You know, sit and pontificate all day long about what gold, what all the economy is going to mean for gold and blah, blah, blah. Who cares? Why do you care so much? Make money. That's what matters. Who cares what other people are saying and doing? I don't care. I don't care what Michael Saylor says. I wouldn't know him if I hit him with my car. All I know is what I see here. And I'm not going to take financial advice from him. Or anybody else for that matter. I don't expect you to take it from me. That's not what this is. It's about teaching how to read price on a chart. I don't care what he does. He doesn't care about me. I don't know him. He doesn't know you. You think he cares about your future? Because he's telling you to buy as much Bitcoin as you possibly can, even mortgage your house, sell your kid and your dog? Does that sound like a sound rationale to you? There's a lot of bullshit in the world. And if you don't know how to differentiate between BS and what price is really doing, you're going to be disappointed in the outcomes. I guarantee it. Everything that you need to know is on your chart. Absolutely everything. Here's Pirate Chain. Another example of a privacy coin that went batshit crazy, spiked, created those two equal tops, created a point on our short-term indicators, which are telling us that there's a big sucking sound pulling that thing down. And where do you think it's going to go? Oh, I don't know. Maybe the 20? But you have to be looking. And look, see these two equal tops? Bingo, right? That's also a target. Just like we showed you on oil on the other side, right? The bottoms of them, they're often areas where price will come back and tag. But if you're not looking at the weekly chart for this thing, you're going, oh, I don't know where the bottom is. Well, what the hell? So all you got to do is click once, right? Change the look. There's your daily. Break one level, find the next. Break one level, find the next. Break one level, find the next. Is it unrealistic to think you're going to come back to the 200 daily on anything? Of course not. What is the likelihood of finding that 200 daily, knowing that this gap is there? Knowing that the POC and the lower value range, which are also draws for price, are well below where you're trading now, as well below the 200. I'd venture to bet that we find it. Maybe not today or tomorrow, but it's a process. And we'll find it. Current price looks for past. That's all it's doing, whether price is going up or whether it's going down. Let's look at NVIDIA. Everybody I know that looks at these at the right side of these daily candles on NVIDIA are like, you know what, I have never seen anything like that, and I just don't like it. It did not look like a happy face. And jokingly, of course. But are you not at the upper value range and you see those wicks, just like we showed on that other chart? Yeah. Like the market just doesn't want to get taken up there. Now, we know earnings are around the corner. Right? We know that. Everybody in the world knew that. It's the most crowded stock on the planet, probably. So, what is this, the Monday or Tuesday? So you gap down. What do you see there? You see your short-term averages pointing out, telling us that there's some momentum to the downside. Now, you're probably going to see that gap down, knowing that you're coming into earnings. I don't like trading around earnings. Some people make a living from doing it, but you know, to each his own. We're not all good at everything. But you know, that in here looks like some sort of a short setup. Are you trading above the 20, the 50, all of your, like well above your support? Yeah. There's the 200 down here. So, you know, like, hey, is it unreasonable to come back and check the 20? No. Now, there's your confirmation short signal. Could you have cheated? You know, we programmed this in here to show you that you can kind of get an early entry if you like. But there's your quote unquote safe, profitable entry. This was the insurance. Bounce off the 50. And I think this was really confusing for a lot of people. So you had the gap down and then the gap up. This never did trigger anything, right? So this is your impulse down that hits the 50. This is a really nice snapback, really is what it is. but it doesn't hold. Right back to the 20, and then you break it right back to the 50, except because you've kind of struck it here, this is no longer the first attempt, right? So now you can see all of this divergence. You can see the trend indicator telling us that the trend is down still, and you're failing major moving averages. Even more important. Next candle, trend still down. Doesn't matter that it's green to me, that it's green or red, okay? It just doesn't. Break the 50. What do you find? The 100 MA. Break one level, find the next. There's your, okay, so you bounce. What do? You bounce to the next level. Prices oscillates between these levels. That's interesting. Right? So even here, all this was still downtrend. And you had plenty of opportunity to short this thing well before earnings. You've heard the term the smart money, correct? What is the smart money? The smart money is the money or the individuals or the institutions that know something that everybody else doesn't. Do you think anyone in here, does anyone think that maybe the smart money knew something long before earnings? Why do we tell you to, quote unquote, do what you're told? Because we're only interested in what the money's doing, right? We're interested in what money's doing, not what people are saying. We talk about the 4-hour chart and how I like to use it to get good entries onto the daily. Right? Well, here's the 4-hour chart, giving you also another look that, hey, you know what? There's something going on here before everybody else figured it out. So here's earnings on the 19th, and you were told to go short on the 5th. Make sense? So why do I not care about what all of these people have to say about everything? Because it's just noise. Right? Just noise. It might be intelligent conversation. It might be very meaningful in some contexts. But ultimately, we're just here to monetize the chart. I'm not really interested in the computing power of X, Y. I don't even know what you're talking about. Is all I know is that I got a sell signal to sell your stock. That's all I know. Or I got a buy signal to buy your stock. That's it. Everything else to me, it's just noise. I don't care if you've said you've made money or if you've lost money. The chart will tell me whether or not your stock's going to go up or down. Some of the best stocks you'll ever own are companies that don't make money, or trade that ones that don't make money. But they're fun to trade because they have great moves and great runs up and down. And at the end of the day, this is just the chart. This is the most crowded stock in the world by far, I am sure. And ultimately, the chart's telling us what its intentions are. You're finally breaking the 20-day moving average. You're trading in very, very, very light volume with a big gap to the downside, with the 50 MA sitting at $150. Is it unreasonable to think, based on what we show you every week, that what happens when price falls or rises into these gaps? It moves quickly. And, you know, the 50's there waiting to be tagged. It might take 2, 3, 4 weeks for that to happen. I understand that. Sometimes it'll happen really fast, sometimes really slow. As long as you're monitoring what's going on with the trend, like here, right? There's your insurance, there's your insurance. Everything else is yours. This is a language. It's a real-time representation of what money's doing, not what people are saying. Math is a language. This is a derivative of mathematics, and thus a language unto itself. Right? I get it sounds a little nutty. Like, it's hard going into a party with your friends saying that you do technical analysis, and the first thing that comes up is how, you can't determine what's going to happen just by lines and all this kind of stuff, and that's, you're going to have to deal with that, right? That's just ignorance and a lack of understanding and blah blah blah. And then you'll get to the point where you don't even want to talk about it because it's just a pain in the ass, right? And then you get old and crusty, and then you don't care anymore. That's probably where I am. But all of this stuff is just telling you, hey, where price could go. This is no different than the weekly oil chart that we showed before. If this thing is to continue to break down and I don't get support at certain levels, then it will continue to do X. When will that invalidate? When enough money comes in to change the direction of price. The best thing about this is like being a weatherman, right? Like, you're allowed to, be invalidated. And at the same time, use that as opportunity when that invalidation comes. So, hey, was this a valid uptrend? Absolutely. Does it look like it's been invalidated? Yes. Is it okay to go short to monetize the downside? Yes, that's the job. Again, it's simple or as complicated as that. Right? We really have to try and stay out of the weeds, right? The thick of thin things and all of that stuff. This is the weekly chart for layer. And if you recall, I think a lot of people went broke trying to short this thing, and then all of a sudden it just went straight down. And it still has not recovered. Like, there are people that have been trying to long this thing the entire time, thinking, oh, look at that flat bottom. It's got to come up and challenge those old highs, thinking that that's going to be the one that changes their life. I'm sorry to break it to you, but if you want to know what to do with this thing, just watch the weekly chart. All right. When you start to see if you actually get a buy signal on this thing, maybe that'll be the one. But there's no reason to buy this thing on the daily or the weekly yet. It's just been in one massive downtrend. And it's the trend that matters. Like, if you were to buy any one of these 3 green candles thinking that the bottom was in, well, what did you really do? What's this? This is a failed breakout. What happened? You came back and you took out the previous wave's low. And then the trend down continued, and it's still in play. And this is why we use fractals. Because this weekly chart is telling you, this thing doesn't really have a heartbeat, and anything that you're seeing on the daily is simply a sign of life. Right? That's about it. Until the market tells us that it has something else in mind. I love the name of this, useless, right? How funny is that? But it's just a chart. It trades just the same as everything else. Look at, on this daily chart, from up here, we can, that's another whole other story, quite obvious too. But I mean, there's your signal. This is the insurance you pay. There's your entry. And it has been nothing but down. And how, this is the unnerving part. Oh, should I be out? Should I be out? Should I be out? Just as an example. But if you're following what we use for trend, all of that crazy, stressful decision making goes away, because this daily is telling you that there has not been, it's still safe to be short. Right? Little bit of a sign of life maybe, but it doesn't look like it's changed or changing trend yet. And again, this is where getting accustomed to how long it can take for things to actually do what you anticipate they are going to do can be exhausting. So that's where the patience really does come in. CFX is another one that just, hasn't, and I know Rico, you used to trade this as well, but it really hasn't recovered. And of course, now would be a terrible time for it to expect it to, with all the downward pressure. But it's, once it failed to 50 here, it's been nowhere but down.
Yeah, I actually got a couple of trades in because me and my buddy, we still like to trade it here and there. And there was some good short opportunities. And he was like, do you think it's going to go back up there? I was like, man, if it couldn't do it like kind of when the market was kind of hot right now, when it's tough, everything that I've been eyeing out is just kind of shorts just because it's been, you get that thing like, and I get this from you, like trying to push water uphill. It's like the minute you feel that, it's like, screw that, man. That's a lot of work. I don't have time for that. That's too much work. So
I know.
As much as I like to trading it, it's like this is where you start to something you said earlier, and I think we all fall subject to this as you're evolving into trading and stuff. And if you guys are listening on X or YouTube, wherever is listening, please like and subscribe to this, because we've all kind of been through this evolution of emotions, right? That you got to kind of deal with eventually. And there's been times where you get married to stuff, and you don't got to be married to any of this stuff, and you don't got to be married to the trend. You don't got to be married to the actual ticker. But you should be married to the actual trend of how it actually the ebb and flow is going. And I've been kind of like, where you said earlier, it was like there's no way that it can't. Like that is something that I found. When you hear yourself saying that, if you guys are listening to me right now,
I'm laughing because I know, yeah.
Yeah, if you tell yourself, and maybe you catch yourself in your head, and or maybe even you whisper it to yourself, and you're like, "There's no way it can go lower." You might want to really reconsider, because when you can let go of that, oh, it has to go higher, or no, it can't go any lower. When you can let go of that, you start to be more accountable for like just what's going on. And there's moments where like we got to constantly keep the emotion, the human emotion, in check, because it likes to say, oh, well, CFX was so good for me for 2 months. There's no way it's going to be bad to me this month, right? And it's like, there's no way that it can't do this. And when you start saying there's no way this and there's no way that, it's like, okay, you just sip the Kool-Aid. You just drank too much. It's like, you got to sit down.
Yeah. A friend of mine's father used to have a saying: if 3 people tell you you're drunk, it's time to sit down. Right?
I like that one. I think that's valid. I think that's valid.
This chart here is the SPY weekly, and the reason I wanted to show you guys is because you have these 4 red candles that appeared at this top, and this doji was kind of symbolic of maybe kind of a top-ish, and we've had a pullback that took us to where? The 20, right? So we show you on all these different time frames how when price comes back to tag these levels, that when I say tag, it doesn't mean break, right? Like that's not an automatic. And what happened here is that we've come back to the 20 weekly on SPY, tagged it, wicked it, and prices popped. And at no time, even through all of this, which turned out to be a month's worth of drama to the downside, it didn't produce a sell signal, right? And now you've got this green candle pushing higher here. Now we could come back in a week or two, and this might look like a double top or 2 equal points in price. But again, that doesn't necessarily mean that you roll over either. This could prove just to be a retracement, right? You pull back to the 20, you bounce, and then the beat goes on, and you take out the previous wave's high, as opposed to rolling over and failing and taking out the previous wave's low. This bounces to take out the previous wave's high, and then proving that this was simply just a retracement and a continued uptrend, right? That's the option to the upside. But we haven't produced a sell signal even with these 4 red candles, and that's a testament to how much momentum there was to the upside, right? In order to spread these levels apart like that, making it difficult on the way down, even with some velocity, to reverse the trend. Which means that, you still have to come back, and at some point you'll tag the 50. Part of me wants to just get it over with, but It doesn't look like that. That's what they're going to let us do.
I'll rip the Band-Aid off.
Yeah.
It's kind of nice because you get to just, if you can, that's the thing is like, it's not always just about like making money in the market. It's also just like surviving the market. I think October 10th showed us all that kind of lesson, and being able to just, all right, let me just make sure that I can stay in this market. And you don't have to take every trade, right? You can,
Nope.
take a step back and like the phrase that says, sometimes the best trade is no trade. And it's like, maybe pretend that you were going to take that trade there, just write it down on a notepad. Hey, I was going to take the trade there. Boom. What would have happened if I would have took that trade there, right? And just
Yep.
start to, especially when times like this, you're not missing out on too much. Bitcoin's not flying. Nothing's flying. Everybody's like, oh, everybody's got this like worried face on or this worried look on their face. It's like, this is a perfect time where you're not missing out on anything, where you can, practice the strategy and be like, look, I would have took the trade using this strategy that I learned from Blunt on these live streams. I would have did it here. I would have got out here and just keep
Yeah.
track of it, because like I said, you're not missing out on anything right now, where the markets are still trying to figure themselves out.
Yep. And it's so I have a friend of mine who's teaches data analytics at an MBA level, and he's very interested in this kind of stuff for obvious reasons. And he sees it as the ability to predict, right? And I guess to a point, there's a little bit of truth to that, but I try to be cautious about using it in the predictive context. Is all I really want to be able to do is have an understanding of, because I have no reasonable way of determining outside of what happens after every current candle, of predicting, like, did I predict that oil went to 61.66? Well, I don't like to refer it as a prediction. I just refer it to, if a scenario was to continue to progress, that would be a level that I think it would be attracted to, and I don't like to think of it as a prediction. Right? But we've been doing this, like, Solana's on your screen right now. It's the daily chart, and we look at Solana quite regularly because I know you guys like to trade it. But aside from the crazy volatility from a couple weeks ago, even with that included, where price has been moving, or we suggested it may move to, is actually pretty true. Like, here we are. Right? What did we talk about with Solana? If we continue to if we broke the 500 and the 200, what was the next level down? The 1,000-day moving average. And what did you hit? The 1,000-day moving average. Now, we never suggested that we were going to stay there or anything like that, but that's a place where price is probably going to want to say hello. And because no money came in to change the trend and price continued to fall, it was just falling to a place that it's been before. That's all it's done. But did we predict that price was going to go from X to Y? No, I don't like to look at it like that. I just think that we have the ability to understand how price reacts at certain levels under certain conditions. And, when the moon and the sun and the stars line up, we can say yes, that, there's our oil, right? We could say yes, 61.66 is an area that we can see as being reasonable because, right? If you were to break all these things on the way down, then ultimately you're going to look for certain levels, and that's all we did. But we didn't say, I put a stake in the ground and saying, I'm predicting that. That's not what we did. We just said, if these conditions were continue to deteriorate, that this is a level you should anticipate visiting, just like now that we've broken 61.66, the next level down that I think you need to pay attention to is right in here. But again, I'm not predicting that oil's going to go to $47. Right? It's not what I'm doing. I'm just saying that, just like up here, if these conditions were to deteriorate, 61.66 is a likely level for me. And then, now that we've broken that and we continue to look to the downside for more support, it comes down here. But we're not saying I'm predicting X. Right? And I'm also not predicting that it stays there or doesn't break farther. I'm just saying currently that's the next level that I think it's looking for. And look at our T-line and 5 EMA all diverged, right? Like this has been a downtrend for quite some time on the monthly. So we're just following price. We're not front running it. Right?
I like that better, Blunt. Honestly, that's been helping me quite a bit. Like I was waiting for you to finish on that whole like prediction thing, because you kind of fall into that, right? It's almost inevitable for you to kind of fall into this idea where it looks like you're predicting price, and yeah, it could look like that. Like you even bring up the news guy, right? It's like, yeah, we keep getting dark clouds like this. Most likely it's going to rain, right? I'm not saying that, you know, I'm controlling the rain or that I know for sure that it's going to rain, but hey, these dark clouds are stacking up on us where, you know, the odds of this going to this level and potentially producing rain is realistic, right? And it's like, for me, it's been really easy for me to, and I was talking to my brother the other day, and you know, he was getting into like, you know, where when you talk to somebody that's not doing it all the time, they want to, that's one of the main sentences that keeps, where do you predict it's going to go to? And where do you predict that it's going to go? And where do you think this is? Like, wait a minute, we don't know. Wait a minute, let's just get that out the way. It's like, we can get an idea where it can go if these conditions kind of continue, but I rather us, we're actually a little bit behind price because we're tracking it. I was like, we're more like hunter gatherers on price action than anything, you know, and we're following the trail. Is the trail still hot? Well, yeah, it's hot. I'm picking up the trail, and the trail's going down. All right, cool. We got a nice warm trail. So it's more so that following the treasure map and than the predicting. But you do fall into those scenarios because even myself, like, you know, even like with ETH and some of the prices that we talked about, you know, it would look like somebody's predicting these prices, but no, we would look backwards. You know, price has been here before. So, okay, if these conditions continue, I mean, hey, it's done it before. They could do it again.
Yeah. You know, this D-wave chart is also really good to give, you know, that kind of what happens when scenario. The reason I like showing this one is because the bulk of the concentrated trading that you see in the volume profile is within where it's trading right now. It's not like some of the charts where you're trading in these gray zones, because like you can see, this is the upper value range, that thin blue line. And, you know, when you failed it, you pretty much instantly went into this capitulation, right? Like, this is the high average, and the market said, no, I don't think so. And it just rolled right over. Broke the 20 all in one candle, came back to the 50, played there for a couple days. But when that happens, start looking at your T-line and your 5 EMA like we have here, and what you would have seen is, although it was bouncing around there for days, this divergence still being intact was a big clue that you were going to fail it. And the beat goes on, right? There's the impulse down, the sideways, right? Back to the T-line or the 5 EMA, and then another candle down. This looks like it could roll over, and if it does, take out this previous wave's low, probably this wick from this doji, and there's your 200 MA and the point of control on the volume profile.
Yeah, this one right here, Blunt, I just want to give you a shout out on this one right here. I don't mean to interrupt you. You know, I'm wild and stuff, but thank you for letting me be me. But this one right here, I want to give a shout out to your indicator. And if you guys can go over there, you guys can also check it out because Blunt House doesn't do it, so we'll do it for them. Go to blunthousea.com. And this trade right here, and the reason I want to bring up this indicator is because my friend actually told me how much it saved them so much money, right? You know, it was kind of married to the bag. It turned into like, you know, 7-figure bag. It starts to pull back, you know, it has more pullback. But you can see where, like, if you didn't have this indicator, there was a lot of times where, like, on shorter time frames where it wanted to pretend like it was going to go up, like trying to hold on to the 50, trying to hold on to the 100, right? And it shows you all these times, these times that it's pretending to hold on, but it's really not. And you know, if you didn't have an indicator to kind of keep you in check, or, you know, some of this method that we're talking about right here, you would be catching a falling knife. And, you know, if you're trading with a large amount of money, we're talking about saving, you know, $50,000, you know, $100,000, you know, some of these days can go pretty wild, and these swings can cost, you know, somebody a lot of money. So if you guys are somebody who's trading, definitely go to this website that I mentioned, blunthouseta.com, because this has personally saved one of my friends quite a bit of money on a trade that was really hot. You know, he got into $6, is roaring. We were excited when it broke 19, then it's breaking 20. We're like, oh my God, it's going to go to 30. You know, it goes to 40 something dollars and prints over 7 figures and stuff like that. So it's going to be really hard for you to let that go after, you know, you've been holding it since $6 to $48. And this is why we use these filters, because man, the human emotion's a trip. You know, it'll try to sweet talk you into holding on to something you shouldn't.
Yeah, and you know what? Like this week's candle, you can see we've got, you know, it opened below the 20, and you got this big gap down here. I guess we kind of identified that $10 range before.
Yeah.
But there's your point of control, which you know you don't want to have to hit, but start to have to think: this the 50, like all this past price here, will be a magnet, right, for price. So this will be interesting. But I'm glad that he's using it.
Yeah, he's good. He's going actually on vacation. I'm gonna miss this man because you know I've been really close with him for like the last year and stuff. Yeah, man, I really care about this guy. But he's going back home. I'm happy he's get to go back home and visit, you know, Ethiopia and with a nice sized bag and stuff, and take some of this stuff that we've been working on together for like over a year.
Awesome.
You know, it's all about passing this on, right? It's like that's what you're doing, Blunt. You're doing me a massive solid by, you know, passing on all this knowledge, and that's why I'm so glued to your hip and stuff. And now we're passing this, you know, now this is going beyond Web3 and beyond the crypto talk. As far as, you know, my friend is going back to Ethiopia. He trades traditional stocks. He's in crypto. He holds XPX, a nice size bag. He's not even in the TG because he's just, you know, he's good and he doesn't have to worry about stuff like that. So, but it's nice to see that all this knowledge is going to continue to just keep being passed on and where it can be useful for other people, because that's really what it's all about at the end of the day.
Yeah. Well, you know, for people that are interested in using the indicator, just go to TradingView, which is a great platform, and connect with me. It's at BluntHouseTA. And from there, we can get you your subscription running. And it's $99 a month. It probably pay for itself. Most people tell me within the first day or so they use it. So I think you'll find it a very useful tool to keep you not just in good trades, but out of bad ones, which is, for me, was equally as important, because I found I was one of those guys that could, you know, if I could find my way into a terrible spot, I would do it, right? So this has been helpful to me to keep me out of those situations. I do have a hard stop today because I have another call I've got to be on, but so I'm going to cut this one short a little bit. We are back on Thursday, however, to kind of catch up and see how we make out. And I think most of us are really interested to see what happens with BTC this week. Does it, you know, kind of come back to that 74 range and fail that 100-day, or does it get a reprieve and a little bit of a bounce? So this is kind of a critical juncture, because if it starts to break down from here, and you know you start looking to the 200 weekly, which is a completely normal place to go, it's going to make a lot of people really uncomfortable, and it could trigger some other selling. So let's just kind of keep our heads on a swivel, do what we're told. You know, use your stops, play safe, mitigate the risk, and don't use too much juice, because that's where you're going to get in trouble. But if you do that, you're probably going to be okay. I'm going to, again, cut this one short because I got to run, but I will see you guys on Tuesday, and know that you can reach out to me at any time. Thanks very much, guys. Rico, it's always a pleasure to have you in here. I love you like a brother, and we'll see you soon. Take care, everybody.